Stocks are heading lower as China is falling apart. Today, we're going to get fundamental, not so technical. Last week's report was really technical, went over the charts, been sharing those charts all week, all over the social medias. We've been really on point with the trading. People have been eating that up. Now purchase my course with the coupon code. I'm just kidding. Who do you think I am? Me, Kevin? Nah, I'm actually good at this. Honestly though, I don't get paid for any of this. So if you could, please like the video, subscribe to the channel, call me 4 Eyes in the comments. It helps a ton. A lot of these big companies and these big YouTubers saying they're trying to democratize finance and help the masses, and then they put it behind $1,000, $2,000 paywalls. Buy my course. No, all of this is free. This is how you actually democratize. I will show you. I may be small now, but I'm going to outgrow all these guys and leave them in the dust. Why? Because I'm better. Now, if we're going to break down China, we got to go back to July actually and talk about this double-digit plunge we saw from exports and imports, missing expectations. This has been part of what's been leading to the collapse. Exports fell by 14.5%. Remember, China's a huge exporter for a lot of the world. And the reason all of this is going to be important is because they're the world's second largest economy. So if you do see a major collapse out of China, it will have a large ripple effect to the rest of the world. And that includes the US, although it will disproportionately affect most of Asia. That's not even the tip of the iceberg for issues going on in China. If you look at their unemployment numbers, they're pretty staggering. We're hitting record highs right now, especially when it comes for the youth at 21.3% unemployment. When you start thinking about China's demographics, how they have such a smaller, younger generation than their older generations, you might have heard of the concept of a retirement crisis. That's exactly what China might be experiencing very soon, if not already experiencing it right now. So when you also need to pay for the increasing needs of the older population that's trying to retire and no longer have to work, and then the youth isn't working and has no productivity, it leads to big issues. If you go back to my old videos way back when everyone was saying China's gonna take over, I've been telling you these were gonna be issues, that there was no way China could do that they didn't have the demographics to compete with us. They simply don't have it in them. They can't. They're set up to lose this battle on the economic front. And you know who's likely to win though at 100 years from now? What the big name's going to be, what everyone will be invested in? Nigeria and Africa, where you have a booming population, you have developing economic systems and stability coming to the area. I know there's turmoil everywhere, okay? There are issues, but I think a lot of those over time will get flushed out, and that will probably be the next booming area. That will probably be the next America, giant economic powerhouse. But not right now, because right now we're talking about China on the verge of collapse. They've announced that they're going to stop reporting the unemployment numbers for the youth, likely because they don't think this is a solvable problem. I think this is a safe thing to infer. I wouldn't be that surprised if they stopped reporting their unemployment numbers altogether, because that's the China way. If the data sucks, don't even mention it. Speaking of Chinese methods, how about the tried and true practice of stopping market crashes by simply telling everyone that they can't sell anything? That sounds like a great sign. Now, even though this is definitely a symptom of serious issues with China, it's not the first time we've seen it. We've seen this many times during COVID, and it's usually followed by a bunch of money printing to try and stimulate the economy. This is a practice that we do. This is what Japan does. This is what everyone does. And everyone every time will say that it won't work and that they printed too much money and that they can't get themselves out of it. And eventually, that is probably going to be true. But I don't think we're there yet. Which brings us to this tweet that was shared in the Discord. One of our CFAs shared this from Zero Hedge, where he said, time for the mega barbell trade. Either super long duration as China economy implosion since deflationary shockwave, or super long commodities as China helicopter money sparks a reinflationary tsunami. And, you know, hey, the deflationary thing is definitely going to happen over a longer time frame, and that is a symptom of demographics. Okay, no amount of money is going to overcome the fact that there's simply less people being productive within your economy, especially if them increasing their productivity is simply to try and support the larger, older generations that are retiring and have more expensive needs that need to be filled due to the fact that they're not filling them themselves because they're not employed. So If we look at this super long commodities as China helicopter money sparks reinflationary tsunami, though, that is where you get interesting, because this sounds a lot like for a trade idea I had when China was reopening that didn't really play out. It was quite the bummer, actually, because in my head, I was thinking, all right, we already have a shortage on energy prices. China's reopening, demand should be filled from, a boom of the reopening. And it never came to fruition. It never happened. We didn't get the moves we wanted. Instead, a lot of energy either sold off or traded sideways. But already seeing reports about the massive amounts of oil that China is reporting. And so the thing to keep in mind here is that this headline is saying the most imported from Iranian oil, not necessarily the most they've ever needed, right? Doesn't necessarily mean that there's overall more demand. So what you have to do is you actually have to read past the title of the article, and we have to dig into what the effects of this are, or what's even causing them. So what's been actually occurring is a huge bid war between China and India to get Russian oil, which India has been buying so much it's actually driven up Russian prices and caused China to look to Iranian imports for their oil. This is likely going to be a continued trend, especially after Russia's already pledged to reduce the volume of its oil exports as well. Now, keep in mind, Iran is doing the same thing, right? So we're also seeing that overall, everyone's producing less of this oil. And if China decides to stimulate their economy to try and jumpstart it, that these are likely going to become more exaggerated, and it affects the global market. And as stated in this article, we're likely to see more imports of crude from West Africa and the Americas as well. And if we go look at the economic data, we can see that prices are high right now. I mean, they're higher than they were before COVID, all the way back to 2018. Prices right now are already higher. They're not as bad as they were in 2022, but remember, during this time frame was complete panic about what was going on with energy. What are we gonna do? This is during the Russia-Ukraine conflict. This is not good at all. This was the economy in panic. And remember as well that lots of people are saying that they expect a recession. Now, if it's a real steep recession, it might counterbalance all of these constraints on supply. And it might be the reason that a lot of these oil companies are saying, okay, we're going to pull back on our supply because we don't want a huge oversupply, because we see a global economic downturn over the horizon. Something that I've been talking about a lot. But remember, they're also thinking of very long time frames. And as I've been saying over Twitter, and in my charts and going over the analysis, I think that this market could be bound for another rally, but I think that that's going to start off to a rough year next year. I think after we hit one more rally at the end of this year, I think we get a big sell-off into next year, and I think what you could see from that, well, what will tell us, rather, is whether or not we're going to see a Fed pivot, maybe start to stimulate the economy, kind of what China is doing. If the recession's bad enough, they're going to have to pivot. The banking issues aren't done. Hello? The banking issues aren't done. Hello, here for us. Everyone's focused on China, but don't forget, we made the same mistakes as a population back in '08. There's about 5-month gaps in between each bank blowing up. In between those 5 months, everyone was saying, oh, everything's fine. Everything's great now. No. These things take time. Not all the interest rates have even occurred. Maybe the Fed even does another one. So maybe you do get a steep collapse. And during that collapse, we might see energy prices come right back down. And then boom, you might get a huge stimulus, which then can bring back massive amounts of demand. If the demand comes up and you have a huge constraint on your supply, then prices go up. If energy prices go up, they cause all prices to go up. Everything becomes more expensive. And then before you know it, you blink your eyes, inflation's back. So that could be pretty catastrophic. Now, we'll see in the short term how much of an impact China will really have. I will give some warning on that, because that was the same thesis that I had when China was reopening, and we didn't see it play out. But it is a little bit different now because we have higher constraints on supply than we did back then. So only time will tell. I'll keep a close eye on the charts, and that's what I'm seeing right now.